Well, hey, everyone. It's another week of thesis building, right? It's great to see you. Great to have you guys back. Today, we'll be talking about Shopify. Yep. But before we go into that, you guys know the drill, right? You guys know the drill. Smash that like button, smash that heart button, guys, because, it takes time to do these theses. It takes time to build. We want to spread the algos. Appreciate if you guys can comment if you can. If you have shares in Shopify, let me know. If you enjoyed our content, my content, right, let me know. Put it in the comments, and I love to interact with you guys, right? It's always the best, especially when we're going live, right? It's always the best to actually have a good conversation, quality conversation, especially at these times right now. So yep, appreciate if you guys can smash that like button, smash that heart button, subscribe if you haven't to our YouTube channel, and all is good, right? I'm Warren from Academy. So let's begin. I'm going to share my screen here and let's get to it, because we'll be covering Shopify, right? What they call Canada's pride, right? It's one of the successful Canadian companies, which is quite an awesome company, to be frank. We're going to cover a lot of ground, from qualitative analysis, quantitative, what do they do, what is their business model, will I be investing in them right now, at these times right now. We look in the financials, right? Hopefully we can cover everything within the 30-minute mark. It's going to be quite detailed, but it's not going to be sufficient enough for you to build your own conviction. Remember, you guys have to do your work, right? This is the best time. Stocks are going down. Do your work, do your DUD, build your conviction, build your cash, right? It doesn't work. Position of power doesn't work if you don't build your cash and thesis at the same time. So assess whether or not the cash can be deployed and be held for the next 3 to 5 years. If it can, jump in. If you can't, raise more cash, hustle your way hard. You know the drill. Yep. So it's crucial that we talk about this, and I'm going to just switch this on. Okay. Now it's crucial that we talk about this because Shopify is actually one of the asset-light models, right? So let's cover what do they do first, right? What do they do? Now, when I look at I purposely created this thing, by the way. When I logged into their website, they asked me to get like a 14-day trial and open up a shop. So at first, I thought that Shopify was, like a normal Alibaba, Amazon platform. It's not, right? It's not. They're actually helping people, helping small medium businesses, entrepreneurs, right, to basically set up shop, right? They want small businesses to set up shop. They're helping entrepreneurs to set up shop. If you are interested to open a e-commerce related business, right? You can even have a brick and mortar business and sell shit online. That's what they can do, right? So they have back end to help you that. And I purposely created this account for this video, right? So I'm looking at home, right? I'm imagining that I have my own shop. I call it Academy Warren, right? And I can add my product. I can add my domain, right? Strengthen your brand with a custom domain. Seriously, when I look at this, is that I have a Academy account, Academy website. I sell my shit there, but actually everything is facilitated here. It's way easier, right? And I just, later we'll be talking about the product structure later. But looking at this is okay. The add domain, I can have my own domain name. They can customize my team. They are available here in Malaysia as well, so that's great. Customize my team. Now, I didn't really click onto these because I don't want to go into too detail, but looking at this, they have the tools, right? Tools to help small business enterprises, entrepreneurs, small, basically small players to get in on the field. So add pages, organize navigation. Before I knew about Shopify, I did everything on my own, right? My brother helped me design a website. I hired people to do admin and figured out the pricing structure, blah, blah, blah. But in this, it makes it easy, right? It makes it easy, which is good, right? So personalize your communications segment, customer segment. They have 24/7 on-call customer service, which is awesome. Looking at this, it makes me want to use makes me want to use their service, right? So orders, again, we'll be talking about the bad, the good news, the bad news as we go along. So orders, right? Drafts, abandoned checkouts. They have products. What are these products? What is the inventory that you have right now? Transfers, collections, gift cards, all the analytic stuff, right? Who are your customers? Basically, it's the important thing is data, right? Data on the small business, medium business itself. How well is their inventory? How well is their cash conversion cycle? How much cash do they have? Shopify has all this data, right? They even have your customer data, right? How much are they earning? Or if you actually can input such data, that'll be it. Add customers, import customers, you got analytics, right? So basically you got reports, you got total sales, online store sessions, returning customer rate, all this good stuff, right? Things that I personally don't have in my own website. I have to literally key in Excel on this and just give my my accountant to do stuff, right? So online store conversion rate, average order value, all this stuff is good. Reports, right? And by the way, guys, so that's the bad, right? When you're looking at this, you're looking at a back-end POS system. Of course, Shopify is much more than that, right? Much more than that. They have analytics. They can solve you from A to Z, right? So you come to them, they can set up your domain and all the good stuff. They even have a payment processing system, so that's how they actually retain revenue, right? They even have a subscription model, so you pay and based on tiers, which we're going to explore later. But the moat, right? It says something about the moat. Is the moat strong enough, right? Is the moat strong enough? Simply because if the moat is not strong, then it sort of entrants can just come in and attack and grab their market share, right? So it all depends on either pricing structure, pricing war, or how they can spend in it. It actually encourages more media spend, advertising spend, sales and marketing spend just to get more market share. So that's falling into that hamster wheel sort of model, and that's the bad news, right? If the mode is not strong enough. The good news is obviously they've built the brand, they have their name, their target is good, but we're gonna discuss that later, right? Who is their big clients, how do they make money and whatnot. So yeah, so there's reports, sales acquisition, all the good stuff. We got live view, right? Live view of an order, visitor. I never really experienced the product, but looking at this, it looks, it looks great, right? Everything all in one. We got discounts, right? We got marketing, right? So they help you all around. So, and here's the thing, their sales, their revenues are dependent on how well the merchants, which is their customers, are actually making money, right? Because and a majority of recurring revenue is actually coming from payment solutions, right? Transaction fees. So if the company does well, then Shopify does well. So what I actually discussed with my members, right, with the Discord members, is that if only they had a way to actually see, because Facebook is a successful platform. There's traffic, right? There's volume. Amazon has definitely volume. So, but Amazon is Amazon. So if you are facilitating a back end to help, all other small, medium business enterprises to get more sales from their, e-commerce platform, the best way is to tell them, okay, you market here and you can get traffic, right? The best way is data. If you can sell your data, if you can actually, that makes your brand more recognizable, right? It makes your brand more strong by saying, okay, if you market here, we can help you. We help you on Facebook ads, which they can actually do, but I feel that they have to just highlight more on that to get more, people. Just a no-brainer, right? You don't want to work a 9 to 5, then set up shop in Shopify, right? Be your own boss, and they can say, okay, this platform we have data to say in 3 months, right? 80% of our small businesses has made 20% increase in sales. I was actually waiting for that in the quarter call. I don't think we have enough time to do the quarter call today, but it's good enough to build a solid understanding of this company and thesis. We're gonna even touch a little bit on valuation, but anyway. So yeah, if they can do that, that's the special sauce, right? It's all about data, because again, their business model is tied down to how much the merchant makes, right? On merchant solutions, on payment transaction fees, which they have their own gateway. And so, the bigger the corporate and the client is, the better for Shopify. So if they can actually sell the data and their AI, their ML to say, okay, these platform is better. Okay, you are selling dresses, you're selling cutlery, you're selling whatever the hell, toys. This is the best platform for you. We recommend you to sell it here. So you can actually get commission fees from either, I don't know, Facebook or other big platforms that you think you can actually navigate the traffic to. That's how I think they should be targeted, right? Anyway, that's just off the topic, sort of, off the topic discussion on Shopify. We got apps. They also do mobile, which is great, right? So enough about the product. We already know about the product, what they do, hopefully, right? Again, let me know what you guys think. Let me know whether or not you have invested in Shopify. Let me know what is the secret sauce of Shopify. We can have a good quality discussion in the YouTube down below, right? So all the good stuff. Now I'm going to go into the investor deck. Okay, investor deck. And this deck is actually in Q1 2022. So building essential internet infrastructure for commerce, one platform, every channel, any device. So this is what we covered just now. Snow Devil is one of their clients, making commerce creative and important, easy. So again, let's look at the ecosystem, right? So basically a single integrated back office. We got a small business entrepreneur, right? Whatever, small medium business entrepreneur like Snow Devil. They need to set up shop on payments, right? People need to pay for their products. So, okay, they cover on payments. Shopify does that, helps them. They have capital. So what is capital? Capital is basically, this is actually quite a similar model to Square, what is called Block right now, right? Why? Because and it's a very sexy ecosystem. This is why I fell in love with Square in the first place, right? They are helping, it's a good cause. They're helping small, medium businesses, right? You want a POS system, all you got to do is buy the device, you plug it to the pad, and okay, there you go, voila, right? But obviously Square is much more than that. They already have Cash App and whatnot. Shopify does not cover B2C. So that's the element, right? But in quantum, like if we talk about the ecosystem, what Shopify does is that they can have capital because they have access to your data, right? They have access to your data. They have access to I'm just checking something. Yeah, they have access to data. They have access to how well your cash flow is. They can decide whether or not you are eligible to be in their shop capital. They also have money reserved to basically loan you money, right? Loan small medium businesses money. What do they do in shop capital is actually just to fund your advance your inventory, right? So that you do not have to worry about rolling. It's basically just to ease cash flow. So that's what shop capital does. That's sexy. It helps the business. It's a good cause, right? They also help you in marketing, analytics, which we saw just now, inventory and fulfillment. So again, they're investing in that, and is just to ease the small businesses flow of inventory, fulfillment, all this stuff. Again, they are A to Z system, right? Order management, shipping, apps. So they cover all around. And in fact, they just acquired a company called Deliver, not mistaken, which focuses on inventory and fulfillment. So they want to be vertically integrated, right? They want to even help you. Okay, we got storage space for inventory. You pay us, right? We will ease your transactions. All you got to do is just go, either a subscription fee or just pay your fees, and we can do it for you, right? We can help you on inventory storage, right? We can even help you to deliver better, all this good stuff. So again, they're vertically integrated, which is awesome. That's the good model. Retail is changing. Yes, it is. Our market, Shopify, is the entrepreneurship company for merchants of all sizes. Basically, so in majority of businesses listed on Shopify is actually with early on in the business cycle. So again, that's good and bad, right? The good is you can help entrepreneurs, and it's a good cause, right? It's a sexy product market fit because it's a not really niche, but yeah, somewhat niche, right? You're helping small businesses, and it's a good cause to say, hey, we're helping you. You want to start up? Come to us. The bad is on the money side because the subscriptions are cheap, right? ARPU, average revenue per user, is on what, $50 on average, right? I can give it $100. You got advanced at $299 per month, Shopify $79 per month, basic $29 per month, and light $9 per month. So how much can you get from $299 per month? Yep. Then you got the larger brands, which is the big boys, paying $2,000 a month because obviously the small guys can't afford that. But again, that's where we get good and bad, right? The bad is that what is the cycle is not, the volume is not strong enough for Shopify to generate tons of revenues, because again, it's a volume game. If you price your model, your structure like a subscription-based service, then it's a volume game, right? There are higher margins, but it's a volume game. Well, higher margins provided that you can control on your sales, marketing, and R&D for the platform, right? So that's good and bad, right? Early on in the business cycle, so we got larger brands at Shopify, $2,000 a month, small, medium businesses at this, and entrepreneurs at this, right? Total addressable market, I don't really want to touch on that, but okay, anyone who wants to make more money, SMBs at the TAM is 160B, so that's where they target, which is good because I like to look at the SOM, right? What is the obtainable market? So how realistically they can capture how many users they have. They have 2 million users, right? So how much roughly percentage of the 2 million is actually using this service, right? You can actually calculate that your ARPU is around probably $100, right? So merchant acquisition, Shopify Plus sales, this is how they can scale, right? Their success story is to basically help the merchant grow in a way to become a larger brand, and that's how they can monetize more on when they grow in the cycle, right? So again, it's too early. We all know that early businesses, there's higher chance of failing and it's high risk, right? So that's where and it's a long-term game, right? It's a long-term game unless a few big boys come into them and say, okay, you know what, Shopify, I want to use the service, charges, and we're good to go. So the bad thing is the big boys, when they are large enough, why do they need Shopify? Everything that we discussed about what Shopify can do, they can do themselves. All they need is to pay more. Again, that's why we touched on the element. If they can actually solve the target, help them in marketing, help them get more sales, target the traffic, recommend platforms and monetize it from there, that makes them more valuable, right? But when I've been reading their business model, it's not exactly sexy enough that their moats are strong. So that is the key element that I personally think that they're missing. Again, you guys let me know what you think, right? We can have a good discussion here. So entrepreneur, these are examples of entrepreneurs that actually made it, right? Lewis and Sophie, SMBs, which is good. These are the larger brands. We have L'Occitane, Fashion Nova, Staples, Heinz. Heinz uses them, which is good. Molson Coors, right? Heineken, Lord & Taylor, all these good stuff. Heineken. So our platform grows with our merchants. Yep, that's true. Shopify payments, ShopPay installments, Shopify POS, Figs. Now, Figs is the success story that they have actually been sort of shouting out, right? Because Figs is a listed company now, right? It's actually powered by Shopify. So Shopify payments all run on Figs is actually Figs payment processing system is powered by Shopify, and that's where they can get the the dough, right? The good money. Launched the Shopify plan is 2013, upgraded to Shopify Plus in 2016, right? So merchant-centered, business model where merchant solutions go hand in hand with merchant success. Figs merchant journey. They launched a Shopify plan all the way. They've been, in IPO, ShopPay installment, in partnership with Affirm. Affirm is actually a company who is doing buy now, pay later, and Shopify invested in them as well, right? So this is the essentially they need more Figs, right? They need more success stories like Figs. They need companies like Figs because that's how they can monetize all the way. Shopify payments, Shopify Plus, ShopPay, Shopify shipping, international expansion, good, because we got reach all over the other countries, right? Then eventually ShopPay, and then if their merchants go IPO, even more good stuff, right? Even more revenues, even more margins, better, right? So that's the story. So how many figs like models can they be, right? How many figs like stories can they be, right? So that's the bad thing. I'm putting my bad hat on and I'm assessing all these things, right? So powerful trends in our favor. Glowing skin naturally. You've got e-commerce, right? 2019, 2021, global e-commerce CAGR, 21%, 69% Shopify GMV, gross merchandise value. So that's the key metric here, right? When we want to talk about key metrics, especially on Shopify, we need to look at MRR, monthly recurring revenue. That's where the the recurring revenues are subscription based, right? That's how they calculate it. If it's bigger, obviously the better. And then we have GMV, which in total, Shopify, not mistaken, is up to 43 billion already. Yep. So DTC 15%, D2C market growth, which is not a lot, but okay. 1 million new Shopify merchants from 2019, 2021. That's good. Digital payments, global digital payments growth, and then 59% GPV year-on-year growth, right? So good stuff. More consumers are buying from Shopify stores. That's a good sign. The adoption has been good. They've been growing much more since 2015, and then it's slowing down a little bit. But based on the statistics, right? Not mistaken, in America, e-commerce sales only represents around less than 20%, less than 25%, less than 30%, which I was surprised as hell because China's right at 50. I thought US would be a lot, but there's a lot of room for growth, right? US and Canada. There's a lot of room for growth, and the TAM in these two countries is good enough for Shopify to actually double their value. But again, let's cover valuation a little bit on. So merchant first focus through product innovation, and this is key. They are very merchant driven, right? They help merchants by charging cheap, right? 24/7 service. It's a good product fit, right? That's the good news. I mean, this is how they can scale. This is a sign of good, models, right? Good business models. Again, but the bad news obviously is that is reliant on how their success, right? Is reliant on their success. They should aim to actually charge better, and which we talked about just now. But anyway, multi-channel ecosystem, they have it, App Store, Team Store, plus partner program, all new App Store. In fact, they can actually engage cross-sell and cross-buys from merchant to merchant. And especially with more products that they can offer, right? So shipping and fulfillment, retail, money, marketing, this is how they can actually help all around their merchants, right? Again, they're merchant driven. So our time is running out. Let me just speed this up quickly. Rich and extensive partner ecosystem, favorable terms, right? 8,000 plus apps, 40,000 ecosystem partners. This is good news, right? All this good stuff. Combating climate change. I'm not going to go into this. Growth-minded culture. Invest heavily in personal growth. Build a team. This is a good team, right? So the numbers. Okay, so share of US retail commerce sales. Amazon has market share 41%. So I was really surprised. They're number 2, as per what Shopify is actually telling us. Shopify has 10%. Okay, US retail e-commerce sales. Yeah, so good market share. They're number 2, obviously far from Amazon, but still good. They have a lot of growth to go. Strong revenue growth. When our merchants succeed, Shopify benefits. Again, it's tied down to that. So 86% is plus 86% of revenue growth. And of course, the majority is on merchant solutions, and subscription solutions actually close to 20%, 15-20% of of total revenues, right? So they slowed down revenue growth 57%, right, to 4.6 billion in 2021. That figure will be expected to slow down more this year. Of course, because of consumer sentiment, consumer spending. If a recession hits, and let's cover that. If a recession hits, majority of their small businesses will likely take a huge hit or might even go down under. So that's the bad news, right? It's sad to say, but it is what it is. So that's where their revenues and merchant solutions again will be affected if people, because people don't want to buy consumer discretionary, right? It's a whole big sector. Everything that's sold, well, mostly everything, I would say, their clients sold here will actually be consumer discretionary unless it's staples, right? But staples, why don't you just go to Walmart to get it, right? Anyway, that's the bad news. So Q1 2021 to Q1 2022, they rose 22% only, right? So this But again, to be fair, seasonality wise, they do better in Q3 and Q4, right? That's where all the spending goes just before Christmas. That's where we'll see better revenues from there, hopefully, right? So Q1 year-on-year MRR rose, right, at a 38% CAGR, which is good, but not strong enough in my opinion. 50 to be exact. For if we were to pay a premium on growth companies, that's what we should demand. 50% CAGR, right? Because 38%, if you work out on revenues versus how much they spend, which we'll cover in a bit, it's not really good enough, right? So subscription solutions revenue growth in Q1 has been good. Yep. So the apps is 10%, 27% on MRR, Shopify Plus, and the core MRR 63%. Yep. Strong, consistent GMV growth for this. So they grew a lot in 2020, obviously, right? So that's why the stock price rose like crazy. Then 2021, we're looking at 47% increase. 2021, 2022 rose by 16%. Yeah, strong, consistent, not strong enough in my opinion, right? So increased adoption of Shopify products over time. Shopify payments, increased 27%. Shopify Capital increased 12%. This element of the business, they don't really have to focus too much because it brings risks, right? The restricted cash, it restricts the cash on the balance sheet. It increases the chances of default loans or default advances in case their merchants can't pay back, right? So that's the bad news. Strong adjusted gross profit growth. Okay, that's good. Gross profit. So again, this is actually like a SaaS-like model. Subscription based, you're like a SaaS model. Merchant solutions, you're blending in similar to a SaaS model, right? So again, if we want to uncover the story of Shopify, is basically a platform. So all the costs related will all only be in R&D, right? G&A will be low. Sales and marketing will be high because their modes are not as strong. They don't have pricing power and all that. So this is what we should expect in numbers. And it's true, they will be covering in the numbers, right? But the good news is it's a SaaS-like model. That means gross profits are supposed to be high, but their gross profits only at 52%. So think about it, right? This type of model is supposed to be high. They're not so high. So what do? We should demand a better premium. We should demand a better discount to the valuations if we want to start a position. That's my opinion, right? So strong adjusted gross profit, right? Growth. Accelerated investments in Q1. They've been investing more and more. Annual cohorts provide strong foundation for growth, building for the long term, right? So all these good stuff, growth investments aimed at emerging Shopify flywheel. So we've got more merchants, more channels, more GMV. This is what we discussed just now. It's dependent, right? It's the whole ecosystem. It's flywheel. It makes sense. It makes sense. Investment highlights large and growing opportunity. We got all this good stuff. You guys can read this on yourself. Let's cover the numbers, right? Let's cover the numbers first. When we go to MD&A, we talk about the two key indicators, which is MRR, 105 million, right? It's growing compared to 2021. That's the good news. That's what we want to see. And then we got GMV, again, because more products sold on the platform, more merchant products, more volume, better for Shopify, obviously. And that has been growing close to, how many percent? We got 6, about we got close to 20%, which is good news, right? So that's good. We want to see them growing. Again, that growth, especially in revenues, has to be more than the spend. That's how they can scale. So let's jump in on the Q1 2022. We're going to jump into the annual report later on, but let's jump in on this first. So revenues, we can see obviously it's like a 20% of subscription solutions. That grew by a little bit compared to 2021 Q1. Okay, it's not really an A+ quarter. Let's put it that way. So it grew, I think 15% on the merchant solutions. So all in all, you're growing at 20+%, right? Cost of revenue. So this is where, for me, it gets a little worrying because the margins are not exactly as high. If you look up the margins, the gross profit, the gross margin is only actually at 52%, right? Which is actually lower than 2021. Okay. And here comes the bit where the OpEx, right? The cost that they actually have to scale and streamline down. So sales and marketing is a lot because it represents 25% of revenues. R&D is at 25% as well. G&A is sexy. It's below 20%, right? Really sexy. You've got 108. It's good. It's even less than, well, it's less than 10%, right? Really, really good. Transaction losses. So it brings your total OPEX at 735 mil. That means for the quarter of Q1, they are loss making, right? I'm not gonna talk about the income from equity investments, which is a loss because of a firm and other companies. Let's not talk about that. Let's talk about the core. The net income is actually negative 97 mil. So trailing 12 months, it lowered down their whole net income, right? So they were positive on 3 quarters, not mistaken. But in this one, in Q1, 2022 is actually loss making. So that's the income statement. Again, what is the bad news about the income statement? The gross margins are not sexy for 52%. Operating expenses is high and it's actually increasing more, right? The rate of revenue increase is less than the rate of OPEX increase. So that is really bad news for me, right? That's how we know that it's in a hamster wheel, right? They have to constantly, again, we talked about this, they have to constantly spend on sales marketing to get more market share. They're in 165 countries with 2 million members. They need more, right? I just heard about Shopify. They need to reach more. And how do they reach more? They have to spend more, right? So 25%, it might even go to 30% of revenues for sales and marketing. That's the bad news. The good news is how they can scale over time. Again, it's a long-term play. R&D wise will go lesser and lesser because all they need is to maintain a platform. That's what makes them asset light. That's the good news, right? So this is the income statement. Let's jump into the balance sheet. Well, later. The cost of revenue is okay. Revenue subscription, okay, we already know this. I'm going to jump into the balance sheet. And it's always best to actually look at the balance sheet from the quarter. Total assets. Okay, you know what? I think it's on top. I'm just going to jump in here. There we go. So this is really good. I love the balance sheet. For those of you that are really, stress tests or you are worried about their money, whether or not they can survive, assess the cash that they have, the net cash after paying off all the debt. You can also use the valuation metric where you can see net cash versus market cap, net cash versus the cash burn, right? So let's talk about that. Current assets at 2.5 billion. Awesome. Okay. Marketable securities, 4.7 billion. So the cash they have on hand is practically 7.1 B. Think about that, 7.1 billion for this company, okay? Trade and other receivables is small, which is good. Merchant cash advances is only at 486 mil, right? That's how much they owed. 113 on current assets. So we got total current assets at 8B. Now, again, I don't take this full figure. I'm interested in the 7.1. Good, that's covered. Long-term assets, again, asset line model, PPE is low, right? Rights of use low, intangible assets low. They raised money, right? Equity and other investments, they have 2.8B worth. It was 3.9B. So that is the bad news, right? That's why we need to break down on, financials. So that's bad news because the value of that investment actually dropped, right? Value in a firm, value in other companies dropped. So it pulled down their shareholders' equity, right? Because obviously total assets drop. So goodwill is 356 million, which is good, and it's stagnant to the last year. Very, very good. Not like the Livongo case. So we got total assets 11.8B. Now looking at liabilities, it's practically net cash. You got accounts payable, which is just everything paid within 3 months. They can just pay it today. Deferred revenue is actually low, which is good. Subscription-based model, you got deferred revenue, how much they're owed. So total lease liabilities at 681. Long-term liabilities is practically nothing, right? 186 on deferred revenue. Lease liabilities are 264. They are not borrowing any money. The only money they borrowed is in the form of convertible senior notes at 0.125%. Nothing. That means people want to invest in Shopify. They want to invest in Shopify even with low interest. They don't care because they want to convert those ordinary shares. They want to convert those preference shares to ordinary shares, Class A ordinary shares later on, and they managed to raise 911 mil for acquisitions, strategic acquisitions, right? To be vertically integrated. So it puts their total liabilities at 1.3 billion. which again is practically nothing compared to how much they have. I don't even want to compare this. We can compare with the cash that they have, right? 7.1B, really good balance sheet. Awesome balance sheet. One of the best balance sheet that I've actually been, studying by analyzing some thesis over the year, right? So we looked at this already, negative 97 mil. The cash flows is not as great, obviously, because they are negative on net income. So you take 1.4B is because of the equity investments, but that is added back, right? But all in all, their operating cash flow is still negative. Yep, it's still negative. Working capital is not a lot. Operating cash flow, they have not a lot. The good news is they can survive. They can burn, right? So G&A, when we want to assess the cash burn, we take G&A, because imagine a company with zero revenues. They'll obviously have to scale down on sales and marketing, spend more on G&A, scale down on R&D. So we take the worst case scenario of 735 mil a quarter versus the cash on hand that they have, which is good enough because they are net cash. They can survive for probably 10 quarters, right? And it's impossible for them to get zero revenues. It's not like a Carnival Cruise. So, but that's the worst case scenario. So if you invest in Shopify, the good news is if a recession hits, they can survive. They have all the cash they have, right? Even if they get zero revenues at a worst case scenario. The bad news is where they scale, right? The bad news is obviously the spending, right? The time needed is not as fast and sexy to reach a sexy, growth. The good news, of course, again, is that, and it's very hard to get today, is a growth company on net income positive, which they are TTM wise. If this Q1 repeats to be negative, obviously, then it will be negative. But seasonality wise, we'll be better on Q3 and Q4. So we just have to wait for those results, right? So operating cash flow is not as good, but again, their cash flows from financing is practically nothing. Cash flows from investing is nothing, which is good. So again, healthy balance sheet all around, right? So we covered, I'm going to go into Shopify market cap right now real quick. We are looking at a 44B company. Yep. And if I want to go to Finviz, I should have that ready. We are looking at quite an attractive multiple for a growth company, right? So I'm going to go to shop and go to Shopify. So what I personally worked out is that if we were to analyze and maintain the revenue growth of 30%. So here's the thing. From 2020 to 2021, they managed to raise their revenues by 57%. My question to the members was, and to you, can they maintain that revenue growth percentage? I personally don't think so this year because of consumer sentiment, it's hit, whatever, right? Inflation. So I'm going to put a reserve of 30%, a conservative amount of 30%. That will bring my forward PE to around 120 to 100x. Forward PE. That means full year, they'll have to do X amount, right? And net income to get around 100 to 120 PE. Now, the question is, I think it's too inflated because the revenue growth, again, we highlighted this, right? Revenue growth is lower than OPEX growth. Yep. So in that case, should we be paying more for this type of company in this type of environment? I worked out that Tesla is going to have a forward PE of 70 to 80 if we analyze net income, 3.3B. So again, we got deals. Tesla, Shopify. We got deals. We got so many deals in the market. I want to demand a better premium, a better discount. So what do? I wait. I wait for stock prices to fall. Now, I could be wrong because inflation might be, okay, steepening down and the whole market will go up. But I'm willing to take the risk because I'm looking at this 4P 162 is not exactly that great. I already know the headwinds in this year. And I already know that Shopify is a long-term play. Yep. So these are things to keep in mind, right? So quick ratio, we looked at that. It's 11. That's how crazy it is, right? Current ratio is 11. No debt at all. EPS is strong. Well, strong-ish in comparison, right? So yeah, we covered a lot of ground today. Qualitative stuff. What do? Their pricing structure, their model. their revenues, their financials, and their valuation. How much are you willing to pay for Shopify? Hope you guys enjoyed this video. Again, smash that like button, smash that heart button. Let me know if you're here, comment. We can have a quality discussion going on. Subscribe to our channel, and I'll see you guys next week. Bye-bye.